Welcome to the Operate Podcast, where we give you a behind-the-scenes look at company building from the perspective of the builders themselves. This is how we operate.
Welcome to the Operate Podcast. I'm Kerry Ransom. Today's episode is sponsored by BankTech Ventures, the first strategic investment fund designed by the community banking industry for community bank innovation and investment. BankTech identifies leading products and technologies for community banks and works with the founders and management teams to maximize the impact for community banks as well as their businesses. If you're a bank looking to innovate and invest in the future, or a founder who wants to work with community banks, reach out to BankTech Ventures at banktechventures.com. My guests today are Mike Kelley and Kraig Lounsberry of CBAI, which is Community Bankers Association of Illinois. Kraig is the president of CBAI, and Mike is the president of the affiliated Community Bank Service Corporation. Together, they support most of the over 350 community banks in the state of Illinois, and they are huge advocates for community banks, both there and nationally. And we're going to talk a lot about that today. It's been an absolute pleasure for me to get to know them these past couple of years and work together in areas of fintech and innovation as we both try to help community banks embrace the great digital future. Guys, thank you so much for joining me. Look forward to this conversation.
Thanks for having us.
Absolutely. So I gave a quick intro, but let's start with a bit of orientation, as most of my audience doesn't have a lot of explanation or understanding of state banking associations and service corporations. So why don't we start with both of your organizations? And Kraig, why don't we start with you on how do you work to support community banks in Illinois?
Yeah, so just as a bit of background, CBAI was created actually 50 years ago on February 27th of 2024. So next year we will be celebrating our 50th anniversary as a trade association.
Very cool.
And the impetus, and what a lot of people don't know about it, the association was actually incorporated by 5 community bankers. It wasn't by staff or somebody trying to look to create an association and bring members in. It was by the bankers that were already a part of a subcommittee, which was actually the Independent Community Bank Subcommittee of the IBA, which had been called several different things, Bankers Against Monopolistic Banking and the Committee on Monopolistic Banking and other things. And what these bankers finally decided after working with the IBA especially on branch banking and multi-bank holding companies and unit banking, was that they needed a standalone association because their voices were being drowned out by the larger urban members who were advocating for branch banking and multi-bank holding companies in Illinois. So they created this association on their own with the sole purpose of supporting community banks. And that's been our purpose for 50 years. In fact, our tagline is the same as what the ICBA's is: one mission, community banks. And again, 50 years ago it was branch banking, and that issue was settled in the 80s. But it's still relative today. I mean, community bankers need an independent voice for community banks. And it's shown again this year when the failures of SVB and Signature Bank happened last year. The ICBA and CBAI and the other 24 Community Bankers Association across the country, basically came out and said, hey, community banks should not be on the hook for this. And some of the other banking associations were silent on that. The ones that say they, represent all banks. And so that's our goal. That's what we do. We represent only community banks. We don't apologize for it. We're unwavering. It happened. I've been doing this for 15 years. I've been the CEO for just over 5. And, I was the Senior Vice President of Government Relations for 10 years before that. And so, they've been doing it for 35 years before me. So, and that's how, and basically I'll lead into Mike. So, back in the 80s when, the pillar that this thing was stood up on was advocacy. But the leadership bankers and the small staff at that time, and it was a small staff, we only had one staffer, Bob Wingert, who ran the association for like 44 years, I think. He was the only staff for a couple of years. Then they started adding staff, and what they realized was in order to create a strong association, that needed to be more than just advocacy. And so the other two pillars that they stood up in the 80s, one was education. We now have one of the strongest education departments probably in the country for any bank association, any size. And then the other one was services. And, CBSC, I think, was, kind of created under a different name in the early 80s. And then maybe 1987, Mike can tell you the exact date, was actually named the Service Bank, the Community Bankers Service Corporation, and has been going strong since then, and is probably a model for most service corporations in the country. And you can ask, that's my opinion, that's Mike's opinion, but it's also other, association opinion, and it's also a vendor's opinion. So I'll let Mike talk a little bit about the service corporation.
Well, thank you, Kraig. Great on-ramp. And yeah, Mike, I think he gave you a great intro as well. So would love to get your more info on CBSC.
Sure. So as Kraig said, CBSC was formed about 35 years ago to aggregate the combined purchasing power of CBAI member banks to negotiate discounts and improved access to essential bank products and services. But as a subsidiary, CBSC has greater flexibility in pioneering new services and programs while protecting the assets and tax status of the association, CBAI. So over the years, we've invested in a number of different companies. We owned an insurance agency and sold an insurance agency. We've invested in other business partners that serve community banking. And as you are well aware, we invested in Bank Tech Ventures a little over a year ago. So that's that we think Bank Tech Ventures, as you know, Bank Tech Ventures, pardon me for stumbling over that, has introduced bankers to scores of community banker-friendly fintechs that have improved their operation while generating a return on their investment. So it's been a real win-win for us and our bankers, and for Bank Tech Ventures and the fintechs.
Well, thanks, Mike. It's been a great partnership. And I mean, there's a reason I think that you guys are the first state association that I've ever had on my podcast, because I do feel like after now meeting many across the country, there just aren't ones focused on community banks that have developed such a rich set of capabilities and services as you guys. So kudos to you. And I saw it firsthand. I had the pleasure of attending your annual convention a few months ago. And one thing that I just was amazed by is it's this, like, I don't even call it a collegial camaraderie that exists amongst everyone there. And it's the bankers, it's your staffs, and even the other companies that are there, the service providers and the vendors or regulators there. There's just this camaraderie that I thought was very, very cool. What do you think it is about community banking that brings that out?
Well, I'm happy to start and let Mike jump in. Quite frankly, community banking is relationship lending. It's always been relationship lending. It's always going to be relationship lending, no matter what regulators and Congress and everybody else tries to do to change that, because that's the best way to lend. And in order to do relationship lending, you got to have good relationships with people. And that's what's happened over the years. I mean, these bankers, they have relationships with, their customers, but they develop relationships with other bankers. And through the association, they're in CEO forums and CFO forums. And so they meet on a quarterly basis to do all that, marketing forums. But the convention brings them all together once a year. And these are people some of these folks have probably been coming to this thing for, since I've been, in high school. I mean, it's been going on a long time. And so it's a way they see each other again. They develop those same relationships, even if it's just for 3 or 4 days. And some of them will tell you that they learn just as much and maybe more from their conversations with their peers than they do with, even from the education sessions. And we've carried that, and we as an association, I think, most of the, vendors, and we don't even like to call them vendors, we like to call them partners and associate members, will tell you that we treat them a little differently than other state associations do, because we treat them as partners. And we bring them into the fold. And if we want them to do business with our community banks, then our community banks, I mean, like I said, they're relationship people, and they're not going to do business with someone that they don't think they can develop a relationship with. And so that's why we think it's important for our partners to show up and to convention and exhibit and create those relationships. And that's really what it's all about. And Mike, I don't know if you want to add on to that, but that's been my take on it for 15 years.
Yeah, there's very little to add on to it other than that community banking as a culture naturally attracts people who have a servant's heart. People who want to serve, have a mission of service, and those are our community bankers, and we're so proud of them.
Well, and I've certainly felt it. I mean, within your organization as a partner, I've felt that embrace since this came together. So I appreciate it and do find it very unique in that regard. And I think your leadership just reflects it as well.
Well, and part of it too is, Kerry, is, I mean, and Mike does this really well. Instead of talking to you and taking your message back to the board, he's like, "Hey, why don't you just come talk to the board? Why don't you come talk to the bankers?" And that continues to foster that relationship. And so they're not hearing about this guy that's running this, bank tech venture through our staff. They're hearing about it directly through you. And again, that creates that relationship as well too. So that's why we do all that. We try to get, our partners in front of our members as often as possible to foster those relationships.
Yeah, and it works clearly, and obviously when there's that high trust amongst partners, it works and continues to work. I know you guys have had some of those partnerships that have endured for a long, long time.
Yeah, and it never hurts to buy a few cocktails either.
Yeah, that always makes people a little bit happier, right? So one of the things that I find really curious, and I know you guys have a strong perspective on this, is, Illinois in a world where in the last several decades we've seen huge consolidation in community banks as far as sheer number. Illinois has over 350 community banks still standing, and I think it's only second in the country from a state to Texas, which just has a few more than Illinois does. So just for my audience, can you guys explain a little bit about why Illinois is so unique as an environment for community banks?
You want to take this, Mike? You want me to?
I don't care. Go ahead.
Part of it is, I think, the reason that the association was stood up was about basically preserving unit banking. And I don't know if we were the last unit banking state or one of the last unit banking states, but we were pretty. We fought that battle for a long time, and that's clearly part of it because we held off on the branch banking and the multi-bank holding companies and all that for as long as you can. But we're also, like Texas, a large, diverse state with a lot of rural areas and larger urban spread out areas, and so it fosters that when it's a community bank. I mean, there even in the suburbs. There are a lot of community banks up there that people are like they still go to because it's right in their community, and it's not Chase or Wells or or one of those big banks that they could go to, but. And maybe they have a credit card through one of those companies or something like that, but they do the bulk of their banking through the local community bank. And I think that's part of it. I don't know if, Mike, you have anything to add?
No, in many of those communities, they're the only physical banking structure in those communities. And they've been there for, in many cases, as Kraig said earlier, more than 100 years. And so they've established a culture, and they're fighting to protect that culture of local service. As Kraig mentioned, too, it's why we were one of the last unit banking states.
Sure. Yeah, so it is. I mean, I think it's interesting. So some of it is probably a demographics reality of particularly downstate Illinois. Everybody thinks of Chicago, obviously, but there are a lot of smaller communities throughout the state that, to your point, Mike, could probably have a bank that's there and has been there for a long time. So yeah, fascinating.
It's still a lot of smaller banks too. Obviously banks have realized over the years that they need to grow in order to really thrive. But there are still a bunch of banks in Illinois under $100 million,
Probably about 90.
Yeah, and they are still strong in those communities. And as long as they've got a community that's strong enough to support them, they're going to stick around. It's like you go to a community. It's like we always say, it's your bank, your grocery store, your bank, your post office, and your school. If you lose those things, and maybe even in that order, you no longer have a community.
Sure.
And so, community bank is important to that, actually to having, a community.
Absolutely. Well, and I think you raise a great point too, which is there is probably a minimum viable size for a bank in 2023 that maybe is different than what it was 10 or 20 years ago. And, I think there's some industry recommendations, if you will, of what that size may be, which is in most cases probably many magnitudes bigger than some of these sub $100 million banks. Although I feel like some of them can stick around, to your point, if they have a community that is there and vibrant enough that could stick around for a long, long time. They just have to run it as a good business at that size. So any thoughts there about sort of the size aspect? Obviously, we saw some big ones fail earlier this year. So to your point earlier, Kraig, that's not small sub $100 million community banks' fault for that happening.
Yeah, go ahead, Mike.
Craig. No, I don't want to. Go ahead.
Well, I was going to say, touch on that issue. Again, that was, in our opinion, and probably in most people's opinion, mismanagement and, under regulation, bad regulation on those banks. I can tell you that, if a community bank is mismanaged, the management's gone. And I guarantee you there's not a community bank in the country that's underregulated. So, we don't have to worry about those kinds of problems. But growth is important, but and maybe leading into some of the other stuff we might talk about. You don't need to just grow in sheer size. You also need to grow in what you offer, and make sure that your community and your customers are able to get what they need out of your bank, and they don't have to go to a large multinational bank in order to get the services that they want.
That's great point. Yeah, Mike, any other thoughts on that?
Yeah, when you look at the net interest margin, the NIM of the smaller banks in the state, particularly in rural banks, it's much better than it is in the metropolitan and much larger banks. And why is that? They operate in lower cost areas. They have higher efficiency ratios. They tend to have more of a market niche. And as long as they can satisfy that niche and satisfy those customers and manage those expenses, they're going to do well.
Yeah, great points. And I think, Kraig, to your point, having an eye on what are your customers' needs, because those are definitely not static. Those are changing. Now we have huge generational banking needs where you have younger consumers that it couldn't even maybe occur to them to walk into a branch, because it's just not natural that they would think, why can't I do this on my phone? And it sort of doesn't matter where they are, to be honest. And so it's how they access banking, but it's also those products and services. And I feel like that's where you guys have such a value to offer them, to say, hey, here's a solution that can work. I know we spent a fair bit of time looking at ag lending innovation earlier this year, and that a lot of your banks are doing a lot of agricultural lending and probably need to use more of the data. Yes, they've relied on relationships, but they can probably get even better when they use some of the data that is coming off of these farms or the equipment that's out there. And so those are where I feel like collectively, this is where we can provide so much value to banks to add to their capability and to their products and services.
Couldn't agree more. We'll talk a little bit about our innovation committee, I think, a little bit later, but some of our innovation committee members have been mentoring some of the emerging ag fintech like CropTel.
That's great.
Example. We've been in conversations with Aquoso and some others. So
yeah, that's absolutely great. And that's what a lot of them need, right? Those founders need a banker in the conversation to really help them hone that solution so that it is compliant and relevant and usable and cost effective and all those things that we all aspire for them to be together. Well, and we talked just a little bit about the failures. Thankfully, you guys haven't felt that in your membership, but I am curious, with interest rate changes like we've seen, with a kind of a wild year in banking that we've seen, what are on your members' minds as we exit 2023 and look ahead into 2024?
Kraig, you want to take that, or you want me to start it?
Why don't you start?
Well, looking ahead to 24, mitigating fraud, cybersecurity threats, deposit growth, I think, as Kraig touched on earlier, acquiring new customers, those rank Among the top issues among Illinois bankers, they're concerned about growing revenue and improving efficiency, which is, to me, it's kind of code for how do we grow assets while reducing expenses, while they're also faced with ever-growing competition from credit unions and government GSEs such as Farm Credit. And now the Biden administration's been discussing extending SBA lending authority to non-bank entities. And then now we've got non-bank fintechs that pose a threat. For example, you mentioned ag tech. Farmers Business Network, which is a fintech, wants to become the rocket mortgage of ag lending, and allowing these entities to provide banking services without the same regulation and supervision as banks is setting the stage for a future crisis.
Well, and we've seen, private credit, non-bank private credit in the country has grown immensely over the last few years. And so not only is that, if we see a recession that continues to at least be potential, that, you feel like there will be some reckoning there. Non-bank lending has historically not had as long of a experience set making risk-based decisions as banks have. So, Kraig, any other thoughts on 2024 as you're hearing from your members?
Yeah, all I would say is that 2008 kind of hit everybody by surprise. 2022, 3, 4. There were some crazy things going on. Interest rates this never happened. Again, I'm not a banker, but that's never happened in the history of the United States. So the things that happened were totally different, and it gave our bankers a chance to prepare. So I think they're prepared for what may come. If it's a recession, they're preparing for it. If it's more of the same of maybe some growth with some inflation and maybe rates are going to come down a little bit, they're preparing for it. So I think that again, we think those failures last year were an anomaly, and there were a few others spattered throughout the country. Sure. A couple of smaller banks, but you read the headlines, and there was always a factor other than that it was just the economy or a shock or something like what happened in 2008. So I think in one case there was fraud that took a small bank down in Kansas. And so, yeah, so I think our bankers are, bankers, you've been working with bankers. There's some pretty pessimistic people when it comes to, what they're going to budget for next year, but they're also very optimistic about, their business and what they can do to help their customers. So, and virtually all our members financially and fiscally are pretty conservative people too. So if you ask them, they're kind of like farmers, right? A farmer, you never talk to a successful farmer. They're always like, oh, woe is me, need more rain, need less rain, need, whatever, but they do pretty well. So
yeah, I think that's a great point. One of the words that we've used a lot within our team this year is the word resilient. When we think about community banks, is they tend to be very resilient. They've shown it time and time again, particularly in the last few years through COVID and beyond and interest rate change. So I think, all great points. So the other thing I would love to hear from you guys, and Mike, I'll start with you. As you look ahead, let's say 10 years, what do you think the banking environment looks like in Illinois, in the country 10 years from now? You talked about some of the threats and some of the things in front of us right now. How are you guys helping prepare your banks for the next decade?
Yeah, well, I think when you project that far into the future, and it's difficult to go much beyond 2 or 3 years.
Sure.
Unfortunately, I think consolidation is still likely to continue, but the successful community banks will accelerate their innovation strategies while trying to maintain that personal touch that Kraig emphasized earlier. They'll continue to target customers that value personal service as much as the digital experience, but they will implement new technology that will help them identify those prospective customers that value the personal touch, because they're out there. They will always be out there. Additionally, bankers will implement technology that will help them reduce fraud losses and improve their back office efficiencies and address customer service expectations. Customers will measure their bank's delivery of digital services against the practices of world-class online retailers. Faster payments will become table stakes, and payments may move from cards and smartphones to wearables and biometrics, and payments will become more seamless. In the next few years, most community banks will offer a fully digitized experience, enabling their customers to open a deposit account or apply for a loan online, obtain instant decisioning and funding in just a matter of minutes. Most can't do that today, but most will be able to do that in the next 3, 5, 6 years.
Mm-hmm. Yeah, all great points. Well, Kraig, you talked about this earlier with regard to your relationship with the ICBA. And just to orient everyone, ICBA is really the national advocacy organization, also doing things not dissimilar to you guys in areas like education and innovation as well. To describe for my audience, how would you describe how you work collaboratively with the ICBA nationally, while also you focus on representing your state and your banks here in Illinois?
Sure, absolutely. I mean, obviously, they are a national advocate. We affiliate with ICBA and ICBA alone at the national level. So, all our government relations work at the national level flows through the ICBA. Now, we're one of the few states associations that has our own federal lobbyist that works on issues, and mostly within our congressional delegation, occasionally outside, with through the ICBA. But that is where it really all begins, is on the advocacy level. We also work with them to promote. We have some services that we share with them. We have services that we talk about with them. We have a great relationship with them, and we advocate on their behalf, and they advocate on behalf of ours for membership as well. There's not an event that goes by where I'm not speaking to a group of bankers, especially when I'm talking about issues, where I'm not saying, hey, and if you're not a member of the ICBA, you need to be, you should be. They're looking out for you on the national level. And there are some things we compete on. We compete on some services. We compete on education offerings, but we found a way to work around those. We work with them, to share some of their education. And this is something they just developed in the last couple of years with the other community banker states, especially the ones that don't have large education departments, to allow us to funnel their education to our members, and provide something of value to them. And the thing I would say, the reason that all this is happening is because they are just as committed as we are to making sure that there is a independent voice for community banks, both at the national level and at the state level. They work hard to try to keep the Independent Community Bankers Association. There's now 25 of us throughout the country. And that's not that they don't work with, there are dual affiliates. There are states that affiliate with both the ABA and the ICBA. They work with those folks as well. But they understand the importance of that independent voice. And so we have a great working relationship. We always have. Since I've been here, I know I got, with the changes Rebecca's made, being a community banker herself, that's just enhanced those relationships. And, we're probably as close. I don't know, Mike can chime in on this. He's been around longer than I have. We're probably as close to the ICBA now as we have been, in our 50-year history.
Yeah, very true. Very trusting relationship today.
That's great. Well, one of the things that I think is along those lines as well, and Mike, you probably can start with this, is the Innovation Committee. And you were really early as an association to set up a set of bankers who really wanted to proactively think about innovation. And I'd love to have you share the history of that and what you've seen happen as a result of that committee and where it's headed.
Yeah. So, Kraig and I were talking a little bit this morning before our meeting with you today about innovation. And he reminded me that we actually started a payments committee in 2017. And it was charged with evaluating the FedNow proposal, the Fed's proposal to form FedNow. And they were on their listening tour. And our association felt like it needed to take a position. And we had advocates in community banking who opposed it and those who supported it. So we formed a committee, went on our own listening tour, and began participating, and finally took a position that's in support of FedNow. The ICBA came to that same conclusion shortly after we did, and then we work together to help encourage the Fed to form Fed Now. So we're strong believers in Fed Now as an alternative to the clearinghouse.
And the reason for that is because our innovation or our payments committee took the time at that time to basically look at the clearinghouse.
Mhm.
We had members from the clearinghouse. We had their folk come in and talk to our committee and talk to us about what they were offering, and so it wasn't like we just said, hey, they're bad, we're going to go a different route. We took the time to evaluate them, and our bankers said, you know what, they're going to do is just not in our best interest. We need, another avenue for this, another venue that's not controlled by the largest banks in the country. So again, leading into what, Mike's going to talk about innovation. I mean, payments is innovation. I mean, payments is everything in banking, right? I mean, and all that stuff that's happening and continues to happen is innovation. So it was really a kind of a lead in to, what we developed probably 4 years later with the innovation committee.
Right. So yeah, clearly payments part of fintech, but it's under the fintech umbrella. So our committee was formed about 30 months ago and charged with identifying and evaluating community bank friendly fintechs that have the potential to improve the operation profitability of our CBI member banks and maybe become a preferred service partner of Community Bank Service Corporation. But at the time we formed our committee, we really didn't know that much about the fintech world. We put together a committee. We began searching for an expert to address our first committee meeting. I called a guy I did know at the time, Charles Potts.
I know him.
I know him now too. At the time I didn't. And called Charles, and he was at ICBA and headed up their innovation efforts, and asked Charles who he might recommend. And he went through a number of names, and then we concluded he offered to facilitate our first meeting. So he flew to Chicago. We had the first meeting. I just want you to know he blew us away with his knowledge, his expertise, his flair, his passion for community banking and the whole fintech world. I mean, it was a real eye opener, and all of our committee members just bought in. And immediately then planned to go to Little Rock, Arkansas to an accelerator. And we did that. And just coincidentally, it was the same time that Bank Tech Venture had its limited partner meeting scheduled. So we got to meet you and some of the folks and some of the, not just the limited partners, but also the general partners and some of your portfolio companies at the time. Again, our folks were so impressed, they came back and convinced our leadership of the association that we should promote Bank Tech Venture, that we should encourage our members to invest, and that many have, and that we should invest, and we have, that we continue to then work with ICBA to consider some of their accelerator graduates as potential preferred service partners for the association. On the front end, we've actually introduced a couple of companies that went on to participate in the accelerator program. So it's been great working both ways for us.
Yeah, I feel like I totally agree. Right? I mean, I think that has been, I would say, the blueprint for how state associations and the ICBA and even what we're doing at Bank Tech to all work together. And I've been super impressed with a number of the companies that you've reached out to me about. We see one of the things I say often is, innovation is happening everywhere. And it's just hard to keep your eyes out for all of it. And so you kind of need a really good network of people and partners to be out there looking for it and helping to validate or invalidate which things are likely to work or not. And so, yeah, I feel like you guys have done some great things in that short 30 months.
Under the leadership of our bankers on that committee, they've now helped, to make innovation permeate our entire organization. So as you know, we've brought the ICBA FinTech Showcase to our convention the past 2 years. We've expanded it now. We're going to bring on an Ag FinTech Showcase at our Ag Lenders Seminar in January. And then we've got a check fraud showcase planned for our C conference in February.
That's great.
So we're going to continue to follow that model. We talk about innovation at every education seminar. We put together a number of forums, CEO forums, CFO forums, marketing forums, op tech forums. There are probably upwards of 150 bankers that participate in those forums every calendar quarter, and fintech and innovation are on their agenda at each and every one of those meetings.
Amazing.
It's ingrained in our culture now as well.
That's
so
cool.
The thing I like to point out before we move on is the speed at which this happened. I mean, we appointed this committee in June of 2021, had our first meeting in October of 2021, and stood up a special purpose vehicle to allow bankers to invest in bank tech ventures in June of 2022. I mean, that's just, I mean, and Mike will tell you, and I'll tell you right off, we don't do that without our bankers. A, our bankers buy in. B, our bankers help. As you know, one of our bankers was instrumental in helping us create the special purpose vehicle. So, I mean, our bankers bought in. They say innovation moves fast. Well, we move fast as well to try to get there. Now it's like Mike said, it's permeated. You know, sometimes it becomes a little joke, you know, innovate on for the sake of innovating. You know, that, you know, everyone's, you know, it's a buzzword, it's an overused term, innovation. But I mean, it's happening everywhere. And, you know, quite frankly, it is part of our, I mean, it's part of every conversation that we're having at a board meeting, or any other meeting. It's talking about innovation and what we can do to, you know, keep our bankers out front on that topic.
That's great. Well, thank you for sharing. I have a feeling that you guys are being also called and consulted by most of the other state associations around the country now as well. How do we do this for our members as well?
From time to time.
Yeah, we do, and we're happy to share,
Yeah.
and we tell them. I mean, and some of them are. I mean, we're all shapes and sizes, right? We're large. Texas is large. You know, Minnesota's relatively large. We have some small. We have some. There are, you know, some state association where they have one or two staff, and in those cases, we just tell them, listen, you've got the ICBA, and you have you know, a vast amount of knowledge there and the ability to help. Go to them, and they're going to point you in the right direction, because, you know, they just don't. I mean, thankfully, we have a separate service corporation that can set up this, and, you know, and have bankers involved, that it doesn't have to be all becoming, you know, from the association board as well. So it's, yeah, I mean, and they have to take it all different shapes and sizes. And so, yeah, we're happy to send everybody your way, ICBA's way, give them information. I mean, because, you know, we grow stronger together, and that's what we have to continue to do.
That's right. Yeah, that's another one of the themes I think we talk about a lot, is that better together. And I just feel like that collaborative spirit in community banking is so rich and vibrant. That's what gets me really excited to be part of this ecosystem every day, because that abundance is real. So, Mike, on the service corporation, because you guys do have such a strong one, you work with a bunch of fintechs, or what I like to call bank techs, that I think are more bank enabling as opposed to threats to banks, that some fintechs are. But just for the companies that want to work with and through community banks, what advice or what have you found works the best for them to work with you? Just advice you would have for them.
That's a great question. First, my advice would be contact me.
Yeah.
You know, send me an email or give me a phone call, or even one of the members of our committee. The committee members and their contact information is on our website at CBAI.com. We've got a number of members of that committee that I use the word mentoring, but they're working with a number of different fintechs or bank techs or ag techs to help them make their product better fit for community banking. We're not so much working on pitch at this point. It's really, how do we develop this product and service to make it more beneficial for community banking, more compatible with the community bank culture, rather than just saying, hey, I've got this new solution. Let's try to make it fit into community banking.
Sure.
That's probably doomed. So we are working with a number of them right now. So that's the best way to go about it. Obviously, we can introduce them to folks like you and Charles and get them prepped for an accelerator in the future.
Well, and they have to understand too that Mike mentioned culture, and you have to change the culture, both, you know, in your association and in your bank, because what our bankers were used to, I'm going to say even pre-COVID, was we would bring them, the service corporation would bring them a solution that had been vetted for years at a time.
Mhm.
And, this is a finished product. And here you got to do this. It's best of breed. This is the company we need to be with. And community banks would sign up and that'd be great. Now, some of these companies are growing along with our community banks. They're helping them
Sure.
develop and they're forcing. And so there's some growing pains. There's all kinds of, a community bank like, why, they didn't, they weren't able to do what we wanted them to do or what they said they were going to do. So it's a different mentality that you're on the ground floor of helping this company help you. So you not only, it might be a little painful, but you have the ability to shape them
Mhm.
the way you want them shaped, as opposed to just getting this solution that's been given to you, that you're probably behind, 50, 60 other banks that have already come up with this. So it is a change. I know the ICBA talks about this. I know Charles talks about this. It's a culture change. You have to make sure, and COVID kind of did that, right? COVID, I would say community banks were, at best agnostic and at worst anti-innovation prior to
Mhm.
COVID. And COVID basically showed them, listen, if we're going to survive in a situation where people want mobile products and, a situation like that, we need to change. It's a good thing you can say that came out of it. Was
That's right.
convinced everybody that you needed to grow and you needed to change. So you definitely got to work on culture. And I can tell you, as Mike mentioned, we have the right people involved and they're helping change culture. We can go out and talk to bankers. Like I said, I've never been a banker. Mike has been a banker, so he can talk banking. You can go out and talk to bankers and say, hey, you need this or you need that. They're going to be like, yeah, sure. Yeah. But when one of our bankers calls and says, I'm using this product, it's awesome, you should do it. Then they're like, well, okay, well, I know Drew, I've talked to Andy, I know, Chad, I know all these guys. Maybe I should do this. Maybe I should actually look at this product. So, that's where the bank community that we've talked about several times, actually comes and pays off.
Well, the other thing I'd add to that, Craig, is that culture you just don't flip a switch and change
That's
your
right.
culture. Okay. It's culture really is a process.
Mhm.
We've got bankers who bought into it on our committee and said, my culture is going to change. I accept that we're now going to partner with some fintechs that may fail along the way, may not deliver the product or service the way we want, but we'll be patient. We'll work with them. And then 3 months later, they're complaining to me that it's not where I want it to be. It's like, well, remember, this is a cultural change. You're literally, as the old saying goes, you're building the plane as you're flying it. You remember that. So
That's right. Well, but
Yeah,
also,
it's a
I
process.
think taking control of your destiny, right? Like it gives you, to your point, you get to influence it. And to me, that's also part of showing your team within your bank, hey, we can do this, right? It's a new set of capabilities and confidence. And we talk a lot within our team about this next generation of talent, and that banks need to really be the cool place for top-notch talent to want to go again. And that part of it is this showing innovation and showing the kind of culture that says, hey, we're not going to do crazy things, but we're going to orient to the digital future that is ahead of us. And so curious what you guys are doing besides the innovation committee. How are you helping banks really embrace this next generation of talent need that they're all going to necessarily have, that are more comfortable with technology, are more digitally native, to really help them?
Yeah, education is clearly what we're doing. As Mike says, this is,
Sure.
we talk about, what they need to do and how they need to, grow, and the younger people that they need to hire. And if you talk to the bankers that have done this, what they'll tell you is, they bring the product back, but then they assign someone in the bank to really take the lead and move this through. And those people are excited about it because they're not just doing what they go to work and do every day. It's something new, it's innovative, it's fun, and it piques their interest, as opposed to just doing the same old, lending or something else that they've done. This is a new avenue to do their jobs and make it better. And so, it's not just, you can't just say, well, we're going to do this and it's going to change. It's kind of everything all involved that you have to bring to the table, You have to bring education. You have to bring the products. You have to bring, again, it's not when you say culture change. Yeah, the CEO can be, I'm all in, I want to do this, but he's got a board of directors. He's got to go back and convince, or she has to go back and convince, that they want to do it too. And so, we try. That's why we try to put this. We try to put it out as much as we can. We do it at the directors' conferences so directors can see it firsthand. That this is the way you need to go. It's clearly, I would say the struggle. You kind of brought up the struggle. The struggle is, community bankers, going to continue to be able to find staff that want to go and work at these community banks. And when somebody shows up and says, it's just a typical community bank, and they see they're doing these kind of neat, innovative things. Hopefully that excites the next generation of community bankers to continue in this great profession.
One other thing I might add to that is in the state here in Illinois, we're really fortunate to have a community bank, a lot of community bankers who support the innovation effort. But one in particular I want to point out is Kraig Lounsberry, who runs a bank here in Illinois, and he has become a disciple of community bank adoption of emerging fintech. And we've had him speak on this subject at a number of our forums, including convention and our directors seminar, trying to explain to bank directors why they need to embrace an innovation strategy. And he's also traveled the country. So,
and our CDD, our young bankers.
That's great.
Absolutely.
That's a great
talk about
example.
that next generation. He's talked to them a couple of different times about this stuff, and they can tell you. I can tell you that they light up a lot more about it than the directors do when he's talking to a directors conference.
Right. And his son was past president of our CDD group.
Right.
And he too is a disciple.
Yeah. You guys are, you definitely have one of the, I would say, leading voices with Kraig for sure. So, and I think you've gotten a lot of benefit from that. So
another change I've seen within the bank is a title. I go back 7, 8, 9 years ago. I'd never heard of a CIO.
Sure.
Now, virtually all banks have a CIO. At least banks over 200 million in assets have a CIO. So they're making that commitment to adopting innovation.
Great point. Well, few things I wanted to cover. So let's do a little rapid fire as we kind of wrap up our conversation. And I'm so appreciative for you guys spending the time today. First thing, I'll start with you, Kraig. What advice do you have for a community bank that says we really need to move ahead on our digital transformation innovation journey? What should we do next?
That's if they've made that commitment, then they probably need to reach out to the ICBA, to us, to you, and start looking at to other bankers and start looking at what that means for them. What does that mean? Does that mean a product? Does that mean you go to your core and you just try to do something at your core? Do you go to one of our preferred partners and try to create a product? You have to. Again, we're happy to talk to you about what you need to do, but you have to know what it is you can't do. Okay, we want to be innovative, and we want to come in and, well, what is it that you want to be innovative on? And so you have to do some planning, and you have to know what it is. We can take you to the solutions, as can the ICBA and everybody else, but you really need to focus in on what exactly that you want to do. But the key is making that decision, right? Once you've made that decision, then there are a lot of people out there that are willing to help you. What we're willing to do is we're willing to basically steer you in the direction of people, entities that we know have been successful with other community banks, instead of maybe just somebody that's going to come in and say, "Hey, I want to help your bank," and next thing you know, it turns out to be a bad solution for them. So that's what I would say. I would say, reach out to whatever your association is, whether it's us or the ICBA or somebody they know like you, and try to figure out what those products can be.
Great advice, Mike.
Well, just to amplify on what Kraig said, you got two choices. You can go the heavy lift, which is, okay, let's look at the bank's strategic plan and what's our mission, who's our customers, and what services will they need, what we need to offer to retain and grow profitable customer base, and then assess the bank's current tech stack and core abilities. Or a much easier lift, as I think Kraig was pointing out, there are a couple of programs that a community bank can say, let's put our toe in the water. Let's do something quick. It's easy. It's not expensive. And let's see if we can do this. and then we'll build on from there. And each success builds to the next success.
That's right. It's a journey, right? There's no silver bullet. You've got to the change, to your point, Kraig, make the decision and then start on that path.
Right.
I would say,
there are some of these partners that are really plug and play, right? You can plug them in, anti-phishing, all that kind of. I mean, those can be up and running in your bank in a matter of weeks, and you don't have to have all this huge, output of cash and capital and everything else in order to start yourself down that path.
That's right. And you'll learn from each subsequent one as well.
Yep.
So great advice, guys. Well, let's go to the other side. Let's say I'm a startup who wants to work with more community banks. Mike, what advice would you have for me as a startup?
Well, you're going to need to get in front of community bank mentors ultimately. And they can help you tailor your product and pitch to benefit community banking. So, our innovation committee can help provide bankers who are willing to consider mentoring new startups. They have the potential, and then we can recommend them to the ICBA as a potential participant in their accelerator program. And we've recommended two startups that have gone through the accelerator. So there is a path, and we'll be glad to help them.
That's great. Kraig, any thoughts there from you?
Yeah, I echo what he says. I would just say, some of these, these innovators, these CEOs that start up these companies have often worked with larger banks and larger entities, and they develop this product they think would be great for community bank, and they realize very quickly community banks are totally different than these larger entities they've been working with. And so they need to get in front of those banks and figure out, this might have been important to Chase, and it's not important at all to a $200 million bank that I want to sell my product to. And so that's the key. I mean, you got to make sure that you get the right bankers, as Mike said, mentoring you on your products.
Yeah, I'll give you one other example of a startup who approached me, and I asked him for his due diligence package, and he's like, "What's that?" Okay, so I mean, he really is operating out of a garage with no idea how to work with a bank.
Sure. Great point, and great advice. So you guys are huge advocates for community banking. When you talk to businesses or people and they find out what you do and they say, well, why would I want to work with a community bank? What's your answer to them? Kraig, what would you say to them?
It's a simple answer, because the community bank is going to be about you as a customer. Community bank can't afford, to run off, 500 customers just to try to chase, the one whale. They want them all. They want they want to work with every single person, and they're going to do what they need to do to get your business, and mainly because when you walk into a community bank, there's a really good chance you can walk into the office of the president and sit down and talk to that person, as opposed to just a personal banker who's sitting out there. Not saying that they don't know their business, but if you want to talk, talk to the person who's making the decisions, they're probably sitting right there in the bank. And so it's that personal, we talked about earlier, that relationship, that personal touch as to why a community bank is just, it is what it is. It's a small business. It's the same reason why would you go to your small mom and pop, grocery store instead of going to one of the large super chains? Well, it's because, you walk in there and that they're going to basically, if they don't have what you want, they'll probably order what you want. They're going to work directly with you, and it supports the local community as opposed to supporting, a corporate, board somewhere.
Sure. Mike, thoughts from you? Why a community bank?
I'll tell you a story. Kraig mentioned I worked in banking back in the 80s, and I was working in the Metro East, and a well-known and popular restaurant caught on fire. And the owner of that restaurant didn't do business at our bank, but the president of the bank and I ran down there, and he put his arm around, and the owner of that restaurant was doing business with a big bank across the river in St. Louis. And our CEO put his arm around the owner of that bank, or owner of that restaurant, who was in tears. And he said, tomorrow morning, whatever you need, I will take care of it for you. And the next day, that guy was in our office. And eventually we built that restaurant. It's a successful restaurant. And then not only were they a great customer, but they became great friends too. And that was, that just continues to motivate me today, that story. And
that epitomizes it. That's such a great story, Mike.
Yeah. We could probably give you a dozen examples of bankers' emails and voicemails they've received from people, especially during COVID, saying, you saved my business because you helped me when nobody else would help me. And that's what they do. And they do it because, as Mike said, they have servants' hearts, but they also do it because they know that, at some point in time, somebody helped them. And the only way that this person is going to get ahead is to get help. And, that's what they're there to do.
It's our culture.
Well, guys, that is a great story to end on, and such great perspective. I knew this was going to be a fun conversation, and it was every bit that. And I just so appreciate all that you do and your leadership in this industry. You do it for your state, you do it for the country and all community banks. And so I just want to acknowledge that, and also thank you for the partnership. It's been a great one to get going, and really excited for what's ahead.
Look forward
Our
to seeing you
pleasure.
soon.
Yeah, we'll see you Wednesday night.
Thank you for listening to this week's episode of Operate Podcast. If you like this conversation, as a favor to me, you can rate us, review us, or subscribe, or tell your friends. You can also reach out to us on Twitter at Operate Podcast. Until next week, get out there and operate.